BTC halving, US elections, ETFs, and tight monetary policy. This is going to be a dynamic conversation. And I'll be welcoming to the stage our first speaker, Alex Odagiu from Binance Labs. Please give him a warm welcome. Samantha Bohbot from RockawayX, welcome to the stage. Marina Baudéan from 21 Shares, welcome. And last but not least, Vanessa Grellet, welcome to the stage from Arche Capital.
All right. Hi, everyone. It's a pleasure to be moderating this panel. My name is Alex. Thanks a lot for the intro. It's wonderful to be here at the second iteration of this conference. We have an amazing panel, and I'd like to kick off with a short round of introduction. We could go from this side onwards. Samantha?
Yeah, okay, I think this is on. Hi, everyone. First of all, thank you for joining us. I know it's late in the day, so we will try to keep it lively here. I'm Samantha. I'm with Rockaway. We're a European-based investment firm. We run a venture strategy, so that's primarily early stage in crypto projects. To answer the canonical question, token and equities. And then we also operate a crypto credit strategy. So out of that, we're essentially a private lender to projects, DeFi projects, also to trading firms, but in crypto parlance, that makes us an active liquidity provider across DeFi.
Hello everyone, Marina Baudéan. I work at 21 Shares, the broadest crypto ETP issuer. We have operation in Europe and in the US since the beginning of the year. We have about 7.5 billion assets under management in our products. And yeah, very delighted to share some insight today.
Hi everyone, Vanessa Grellet. I'm the GP at Arche Capital. We're a US-based venture firm. We invest in early stage crypto infrastructure. I'm also on the board of the Enterprise Ethereum Alliance that tries to bridge the gap between traditional finance and traditional enterprise and open source blockchain.
Thank you very much. And maybe to begin from that side, would love to hear your thoughts on the current cycle. How do you see it? Maybe even compare and contrast with the previous cycles. There's lots of things that have been happening since last year and to the point where we are right now. And I'd like to leave it quite open. And yeah, please share as much as you think it would be interesting for our audience.
Yeah, so when you think of crypto cycles, you always think of Bitcoin halving and what happens after. And we've seen several cycles of that with always higher highs and higher lows, which is an extremely bullish, indicator of where our industry is going. The way we think about it now, and it's also important for us when we invest, because when we invest, on day one, then the token is issued, but it's actually 3 years later. So we think about our exit strategy based on these cycles, which are very different than traditional venture investing. And so if you think of the Bitcoin halving, if you look at what happened in the past, you would think that the top would be sort of in October 2025, then we'll reach the top. But if you think about where we are today compared to the other cycles, all the other cycles were in a zero interest rate environment. Then there was no Bitcoin ETF or no potential ETH ETF or even other ETFs, which really drives the price pressure on these assets. Our view is that we're going to be, at least in the US, in an environment where inflation will continue to be high, so we'll not see the numbers that we've seen in the past 10 years. And so thinking about that, and also the tech cycle, which is really different now with the price pressure of NVIDIA just really carrying the entire tech market. We've never seen that before, right? And obviously the US economy, which is still doing well. Everyone has been predicting the demise of the US economy, and we're still waiting. So I think that's a lot of bullish indicators, and we can get into the details of what happens on the ETF side.
Amazing. Yeah, Marina, I think it's a good point to dive a bit more into the major development of this cycle, which is the approval of first Bitcoin ETF, and now we have Ethereum on the cusp of being launched as well.
Yeah, so what happened earlier this year is just phenomenon. I think nobody was really expecting what happened, to be honest. And what is amazing is the fact that what happened is just a drop in the ocean. So all the money that came into the spot ETF products, whatever it is coming from retail. The IRAs haven't done their due diligence on the product yet. That's going to come more towards the second part. I mean, Q3, Q4, more Q1 next year. So this is still money coming in that we expect. And right now, it's still very much on the, people who wanted to get access to crypto couldn't do it because they didn't want to give their digital identity to an exchange, have the responsibility of doing the cold wallet, etc. They've got now a solution, and that's what they've been doing. What we find also interesting compared to last year, because we have product in Europe for the past 5 years, so we know what ETPs are, exchange-traded products on crypto, so backing one-to-one the underlying assets. Last year, same period, we could only see trading activities on the main products, Bitcoin, Ethereum. Since the end of last year, and especially the beginning of this year, we see many creation on alt. So we've got a Solana product who reached close to 1 billion asset under management. We start seeing, we launched a product on Ton about a month ago, and these are driving, we see money coming in from European investors. So that kind of indicates that the bear market, in a way, is kind of gone. We're more towards greener waters, okay, so to speak. And clearly it reflects in the depths of the number of products and what investors are actually looking for. And we keep on having demand from investors to launch new products on new coins. So really, that's what we're seeing right now.
Well, let's hope Dogecoin is coming around as well. I can buy it into my retirement account.
And BNB, right?
And BNB, yeah, thank you. Yeah, Samantha, I was curious to get your thoughts on how you're seeing the overall investment environment. I know you've been focused on deploying capital lately. Any insights that you can share with us?
Yeah, I think people always ask the question of how do you see sentiment in this market? So you can look at like open interest on exchanges or carry trade to see how people are pricing futures versus spot. I think in venture land, one thing I see is just, are people willing to take lockups? And so Vanessa's nodding. I'm sure she's also gotten a bunch of these offerings lately of, maybe it's a foundation that wants to raise some cash or a secondary seller, and they'll say, a minor discount to say whether it's last price, market price, but with this lockup. And I haven't kind of looked at this quantitatively and run a study lately, but it feels anecdotally like sentiment has shifted to people saying, I just don't want to take any, right? I want to keep my options open. I'll go liquid. I'm also feeling that just from LPs, right? So that feeling where they're coming to you and asking who are really good liquid managers now, which they scarcely asked in the past because they thought of crypto I think at least in the US, is really a venture asset class. It's a bucket of my venture. It's more long term. It's through the investment period. I like the liquidity aspect of it, but that's how I treat it. Less of a hedge fund or trading or exploiting disparities or running quantitative models. And so that as a sentiment modeler would suggest just short term, right? People feel that they don't, like it's kind of a fool's errand to try to price things, but they want that optionality because at any moment they think there could be a catalyst and they want to be able to take those profits off. So I guess that's what I'm seeing, feeling. Yeah.
Yeah, totally. Actually, we share the same perspective. Definitely right. The lockups have shrinked. In some cases, they've gone out all the way. It's quite a big difference compared to the previous cycle when everyone was okay taking longer vesting schedules, 2-year plus. On our side, we were always happy with longer vesting schedules, but now we're seeing the cap tables coming exactly to the point that you mentioned. Cool. Vanessa, just wanted to follow on the point that you made about interest rates. Very interesting environment where, compared to the last cycle, we're not at the bottom of the interest rate curve. We are also not at the top because we're seeing a lot of kind of an inflection point. We've had our first cuts in some of the Western markets, starting with Canada. Europe is coming behind as well. Any perspective on what the Fed might do?
So I won't talk on behalf of the Fed, but my perspective is that the situation right now and the disconnect between the US and European market is going to continue. I still think that, the interest rates will continue to stay high because the situation in the US and the pressure on the hiring market is really high. I mean, there's less and less people that you can hire, so naturally there's zero unemployment, and that's gonna continue. Unlike Europe, I think the elections won't impact that much those fundamentals, and unless we see a government that can directly influence the Fed, I don't think that we'll see that that change in interest rates. So what does it mean for your investments, right? I think we have to stop with the gold narrative, Bitcoin. I don't think it's accurate. I don't think the facts tells you that it behaves like Bitcoin. So I would just look at the long term for this asset class. And if it's possible that we see a longer bullish cycle because of the current circumstances. So if it was like before, I would say 2 years or a year and a half. But given the current circumstances, I think there will be a lot of price pressure on this asset class for a few years coming up the pipe. And I think that's why also investors are looking into liquid and doing that trade-off.
Got it. Yeah, very interesting perspective. I think on the interest rate side, we're going, as you said, we're going to see a disparity, especially across different, larger economies. Like in Japan, we have some really exciting stuff happening on the macro side. Europe just cut rates as well. It's going to be very interesting to tie that back to the election cycle as well. On top of having a big technology cycle, a crypto cycle, we also have the election cycle on top of everything. So that's going to be very, very interesting coming towards the end of this year.
I think there's also the regulatory cycle. And I think in the US, which was one of the big bottlenecks, at least on the regulation side, and people were very cautious, I think now we have bipartisan agreement that this needs to change. I think probably one of the parties will be more aggressive on that. But I think that we'll see at the next elections, current administrative support staff not be a problem anymore.
Yeah, totally. Maybe just to shift gears a bit, Samantha, just curious, in terms of the latest themes that you're pursuing as an investor, is there any particular area of the crypto space that you're more interested in, coming out of the few things that we mentioned, the Bitcoin ETF, the Ethereum ETF. For example, on our side, we're very excited about some of the amendments that have been done on the Ethereum ETF, including staking, restaking. I think there's going to be a merge of DeFi into coming with adoption of these things by institutional investors. Anything that you could share from your side about this?
Yeah, I'm glad I didn't have to pivot off the election one, because I feel like my only prediction there would be like, I think there's going to be an election. I don't know. And all bets are off from there, / gridlock is my other one. But yeah, and what we're looking at, I think for us, we feel like it feels like there was a long period where DeFi seemed stale, right? Where all you were seeing was like copycat protocols, as I call them. So sort of your options protocol, number 3, new venue on Avalanche, perps on this one, repeat. And frankly, that's intellectually, excitement-wise boring, right? You're like, I can already do this. And so what we're starting to see a difference in is people saying, what can this technology let you do that you can't do in traditional markets today, right? Like if and I think that's where, as an example, just taking a basket of stocks, if it's not for people who don't have access to them is that this one? And just putting an SPV on chain doesn't feel that innovative, right? That is not something I cannot do today, me personally. But when you get into more, can I set up a really bespoke peer-to-peer lending or something where I can put a strategy that I'm running on chain and have it, I don't know, be collaborative in a new way, or track a loan. So when you ask what we're focused on, out of our credit strategy, as I said, we're a private lender. And what we're constantly looking at is how can we use this technology to get a better handle on risk so that we can offer more comfortably like rates where we are compensated for the risk we're taking, but they're reasonable for the borrower. So they're not exorbitant because this tech lets us feel better about it, right? So we're tracking payments, or we're setting up new wallet or signer technology where we can really say, we know why this loan is being drawn upon. We're seeing it in real time. We feel comfortable about it. Because that then opens up new things, right? That's like businesses on chain or off chain, but that want to be part of this architecture can get access to capital in a way they couldn't previously. And I think innovation-wise, that would be a new cycle.
Yeah, can I jump?
Of course, yeah. I was going to go to you.
No, I totally agree with this. So we also do some part of tokenization. And I sat down in many meetings where I had people explaining me that they want to tokenize pretty much everything. And then you ask them to draw you, what the workflow, how do you see it going? And basically, it's pretty much a copy and paste of traditional to the new technology, which is in a way, okay, fine, but start thinking ahead of this, because this technology is actually giving you a potential to do something different, something new, to add to it. So what it is, and try to identify that. And we understand that nothing's going to happen from one place to another one straight away. It's going to move gradually, but be daring. And most of the people are not, unfortunately. So, I've never seen a bank making the headlines because they've moved from Excel to an API. I've never seen that. But you've got all banks shouting that, oh, we're going to tokenize things. This is the infrastructure. Okay, yeah, the blockchain is helping you that, but this is the infrastructure. Now, the beauty of this infrastructure, and sorry for the people who were in my panel yesterday, because I'm going to do a repeat, but this is the first time you have we have a potential to invest in this infrastructure. Nobody invested in TCP/IP. Nobody.
I think that's a good segue into my perspective, but I agree with you.
And that's exactly what it is. So if you're a true believer in the technology, this is the new technology, it's coming into play, it's going to revolutionize many aspects of our lives, whether it's finance, whether it's art, you name it, digital identity, so on and so forth. you have now the ability to invest in the future and through different products. ETFs are one of them, or ETPs in Europe, but you can have the direct access as well. You pick and choose. And the two can live together because they're not fit for the same purpose. And I think this is gradually where we're going to start seeing convergence and bring the world to a better place.
Yeah, fascinating, also super inspiring. That's why we're deploying capital, backing the brightest founders as well. Vanessa, did you have any further insights?
I wanted to add to what she was saying, that we're going to see the entire financial infrastructure that we know move to a blockchain infrastructure. And it doesn't mean that you're tokenizing things. It means that the actual settlement layer, clearing layer, is based on the blockchain because it's transparent, it's fast, and it's interoperable. And right now, we see companies just building non-interoperable, copy-paste, siloed, tokenized assets. And there's no liquidity. No one wants to trade them. It has no upside. And so, what's the point? But we're very excited about the other part, which is, blockchain infrastructure is getting really mature, and there's a lot of innovation in order for companies to be able to interact with them. So think about intents, think about ZK technology, think about cross-chain and multi-chain infrastructure. There's a lot of exciting things, and all the innovation happens there, enough to mature for wider adoption. It'll take years, but there's no way we're going to stay in the current environment. And we see a lot of stuff really exciting in payments, et cetera.
Yeah, totally. I actually run a sort of a glossary of things that we move over from traditional finance onto blockchain, and we give them even funnier names in a way. Like impermanent loss. Actually, there is such a thing in traditional finance, which is called gamma risk. They're pretty much the same thing. Or decentralized lending, that's actually a tri-party repo facility. It sounds better in crypto, though. So we're also innovating on the on the new nomenclature. Samantha.
What would you call restaking?
Oh, that's a good one. That's a good. I don't know. Do you have any idea? What would you?
I have a few ideas.
It's rehypothecation of something,
Yes,
but I don't know what that is. It's security maybe. There's lots. Happy to share it after as well. I'm probably somewhere around 20 different names that we can map into one another. Samantha, just curious from your side, do you see any particular interesting developments on the regulatory side? We spoke about the adoption of, or the approval of the ETFs. I think that's setting the scene for some of the more interesting, potential DeFi adoption from a regulatory perspective. Do you have any insights, perspective on that, or expectations maybe?
To be honest, I'm pretty poorly versed right now on to give your regulatory rundown of the day. So for me, when I talk to projects, it's more them saying, probably similarly to me looking at you as an audience, like, hey, I'm really strapped. I don't feel like I'm super up to date on the last 2 weeks of hyper noise on this bill or that or what's happening. So what do I make of it all? Like, how do I digest that? And so from where I sit and what our founders are feeling is, one, they just keep asking that same thing as always of just, can we have some clarity? And I think that's where the ETF has been significant, right? Where they feel, okay, my number one clarity point was just that this isn't the rug isn't pulled out existentially. That there are folks coming in who have vested interests, who have better correspondence and history dealing with lawmakers. There's going to be more lobbying might. There's more experienced professionals in this arena that are getting in. All of that feels supportive for me to now focus on my business. And I think the other thing, you mentioned like interest rates, economies across countries, right? I mean, one thing to remember, it's very obvious, but is crypto's pretty global and almost amorphous. You know, the amount of projects, first of all, that we work with that literally have people, so personnel and business regulation impacts across borders, but then also the assets are pretty mobile, borderless, which changes the landscape then, like global equities, right, where you really go country by country. I think actually, if you want to take it to its most abstract macro, as I think Vanessa said before, it just feels like global tech, or is it a risk-on environment? Probably in the world's biggest economy, still the U.S. So yeah.
Yeah, totally. I think one interesting point that we saw in DeFi specifically, but I think it will take place across all of the other verticals is, you know, we talk about bringing yield from the real world into crypto. I think there's an interesting development that is happening the other way around, whereby some of the revenue generation that is happening in crypto natively is going to start flowing the other way. So, for example, Uniswap has announced their revenue sharing framework and mechanics, and I think potentially a lot of the investors that are seeking that yield coming from crypto native could start asking some broader questions in the overall DeFi when that will converge to the same way that Uniswap has done. So that's an interesting development. But I think what we're lacking is the regulatory clarity.
And I think also, like, maybe more than also in addition to regulatory clarity, it's just legal. Like, I feel maybe that's where I've seen more. I was at Digital Currency Group for a while. I kind of muse now with my former colleagues that, like, the legal cases that are playing out there with Genesis and creditors, and are they paid like in kind in dollars at the time of the loss versus what the asset, like, this is stuff that's going to be in law school case studies and it is being written right now. These are fascinating cases, but they also just signal like a maturation in just like literature on this. So I think there's the regulatory how to play, and then there's the, hey, without all of these learning, there's more rules and precedent. And maybe a little more for us to know what will happen in a legal event.
Yeah. In terms of clarity, I would like to add what's happening right now in Europe. If you work in the fund management industry, if you want to buy ETF in Europe, so not the US ETF, the European ones, they're all governed by the UCITS directive. And the UCITS directive is managed by ESMA at European level. And recently they've opened a consultation to review the entire spectrum of financial assets that you can have on a UCITS fund. And UCITS funds are normally the funds that European investors would buy quite easily. And what's interesting is that for the first time, we're going to be able to actually advocate for digital assets to be included as an asset class into that directive. So clearly we're on top of that. We're trying to be speaking with the regulators and trying to, again, educate, provide data, because that's the great thing about blockchain. There is data and transparency, and explain and educate, again, around what's happening in this space. This is, not a Ponzi scheme. This is tech, and there's an investment case behind it.
Yeah. Amazing, totally. Vanessa, I think you mentioned about also a regulatory point earlier on when we were discussing about the politics side of things. Do you have any insights in terms of how we're going to go from here in terms of, I think so far a lot of the regulatory input that we had in the US was more by enforcement, and then the justice system and the courts of law having to redo some of those, provide more clarity, massage things a bit. Do you have any perspective on how we're going to see it from here on?
So I'm a recovering securities lawyer, and I worked for the New York Stock Exchange for 10 years, and we had to deal with a lot of European regulation and US regulation, like Dodd-Frank and all that stuff. So my perspective is, EU will tend to overregulate, and people like that, but actually I don't know how good that is for the business in the long term. But that's my personal perspective. Then in the US, where you see foundational regulation like Dodd-Frank, et cetera, it really comes after a crisis. You also had Sarbanes-Oxley after an accounting crisis. And here, what is extraordinary is that you had FTX, which is probably the biggest fraud that we've seen since Madoff, which paid all the, both sides of the House, right? Lobbied with the Republicans and the Democrats. And so we're in a very strange situation where they haven't deployed any regulation that makes sense. And I would say less is more in this case, because if we still have time to have the technology mature and then regulate if needed, like for example, stablecoins, we'll probably see something coming along that way. And the US sort of regulatory bodies is complex with CFTC and SEC. So I think it's going to take a lot of time for you to see comprehensive regulation in the US, besides a few specific items. And it will need to go through Congress anyway, so we have time.
Yeah, totally. I think that's the way it should be rather than what we've seen so far. Maybe, I know we're coming up on time, so maybe to wrap up, I'd like to ask you a question. It's more of a bet. What do you think would be the next asset to be included in an ETF? So maybe starting with Samantha.
Maybe the new Paxos yield-bearing stablecoin.
Interesting. Yeah.
Oh, I went with a yield-bearing stablecoin, so it can through money market ETF, and I threw out the Paxos one for old time's sake.
I'm going to be very much more conservative. I would go with one coin within the top 5, so we're probably going to go with a Solana.
Yeah, I think it will be in top 5 or top 10. I think Solana might be a little bit too new in terms of like history of blockchain. There are blockchains that have been around for a longer time. So it really depends on the approach and the demand. So jury's out.
Great. I'd love to see Dogecoin.
Maybe BNB.
Oh, wow. Thank you. Or Dogecoin. Why not? Thank you very much. Appreciate it.
Thank you to our panelists. It's always interesting when you're discussing money and politics on the same panel. And who knows, let's see if Dogecoin is the next ETF or BNB. Paxos, the jury's